Now we're going to go look at the first order book absorption event strategy. So it's called the iceberging partner. Now what effectively you're doing is you're scalping inside the iceberg that you've located, and once you identify the iceberg, you really start maneuvering around it. So you observe the iceberg, then you start working yourself with the iceberg, and you start scalping around that iceberg. We'll be looking at these plays in a couple of video tutorials and a couple of strategies that will really be showing you how to effectively trade this. Now, the holding period of the trade is determinant on the auctioning velocity in the context of the market positioning. So if the market is moving very quickly in a in a short period of time, and then all of a sudden just hits an iceberg, and you observe that iceberg in a very intraday time frame perspective, you might just scalp for a couple of ticks in a couple of seconds. Whereas if the market is moving near a critical level that you've observed and it's iceberging it over a period of over a period of hours, well then you may be scalping in and around that iceberg, but also building a key core position that you might hold for the next couple of hours because your level that you observe on the chart is being confirmed by price action. Now remember, it's one of the things I always say to the younger traders on our training floor. It's always easy to spot a level, but the difficult part on the skill is how you trade the level. So how you trade the level by observing the types of price action events that you're observing. So really important, it's the context of the market positioning, where it's located will determine how you maneuver around the iceberg. And we look at that in a couple of videos. Anything that's beyond the average activity, what we call anomaly auctioning events. What I mean by that is, the market is moving at one type of speed and momentum until it hits a price area that changes the way the orders are going through the order book, and the market's not advancing or declining in such a way. Well, then that starts becoming an anomaly from the recent activity of the time frame that you're observing. So it's an anomaly auction event, so that's what you're trying to observe when we look at our videos. When we look at all the videos and different trading strategies and the tutorials on how to observe this. The faster the pace of the market. So remember this is why great volume and great activity, and we look at this in our video tutorials. The faster the pace of the market relative to its average pace and intensity of the exchange, so intensity of the exchange between the orders and the orders sitting on the bid or the offer, the easier it is to see absorption patterns such as icebergs. It's really difficult to see when there's nothing going through the market to see, well, is there an iceberg or not? It's a lot easier to see if the market is moving aggressively and a price gets reloaded or price zone gets reloaded. So really critically and really important. Conviction levels will rise if it meets your critical charting reference point. So as I said, if you have a confluence of levels, you have a VPOC by a trend line and exiting a weekly value, so you have a whole confluence of levels, and then you see an iceberg and you see the market unable to penetrate lower, well then you can start scalping really aggressively, because it's almost a triple confirmation of a play, and you're getting that confirmation from the particular type of price action that you are observing. And remember, it's the relative counter aggression of the market will determine the degree of the success of the iceberg strategy. So what happens is, we mentioned this before, so say the market is coming down. So the market is coming down towards this level, and all of a sudden over here is sitting an iceberg. Now you can't see that iceberg, but it comes at a certain trajectory and a certain speed. And once it hits that iceberg, then all of a sudden the orders are going at the same pace, but the market isn't able to budge even lower. So it's just sticking there. It's really holding there until the orders slow down, and then all of a sudden the iceberg just firms up, and then the market starts retreating. And the moment the market starts retreating, well then there could be a counter aggression, as all those positions who were shorting into that iceberg have to unravel themselves and cover, and you get this flurry of a move, and it's your ability to put yourself on that trade. And we look at that in the videos and in the tutorials. So remember, an accelerated iceberg auctioning event, that then subdues the market has a greater propensity of protecting the price zone than an iceberg that exhausts its orders before the auctioning velocity dies out. So you can have an iceberg or reloading, but the velocity is always constant, and all of a sudden the iceberg says, well, I filled my orders, well, then the market can continue in its trajectory. But if you see an iceberg reloading and then the order velocity, we've just mentioned in the previous bullet point, the orders start slowing down and the iceberg is still standing firm, well, then it's the counter trade that can prove rather profitable in the direction of the iceberg. So just understanding of velocity in reference to the iceberg, that's really, really important. And that's really is the iceberging partner is trading with the iceberg. Really critically important on how you effectively trade that.